Will Japan crash the stock markets worldwide? Japan today sits on a fault line of economic pressures that could send tremors across global markets. Rising bond yields, a rapidly weakening yen, and an overconcentration in tech and semiconductor stocks have created a fragile environment where one shock could trigger worldwide contagion. Japan's economy is entering one of its most precarious phases in decades, and investors worldwide are asking a critical question. Could Japan be the catalyst for the next global market crash? The warning signs are hard to ignore. First, Japanese government bond yields have surged to their highest levels in nearly 30 years, with the 10-year JGB recently climbing above 2.8%. This is a dramatic shift for a country long known as the world's source of cheap money. Rising yields signal growing fears about Japan's fiscal sustainability, especially as the government pushes aggressive spending plans without clear funding strategies. Higher yields tighten financial conditions and pressure corporate borrowing. Second, the yen is in free fall, repeatedly testing historic lows despite massive interventions. One recent intervention reportedly cost Japan around $35 billion. A weak yen fuels imported inflation, especially painful for a nation heavily dependent on Middle Eastern oil. As inflation rises, the Bank of Japan faces pressure. It faces pressure to hike rates faster, which could further destabilize bond markets and trigger forced deleveraging among global investors who rely on yen-carry trades. Third, Japan's stock market, despite strong performance, has become dangerously concentrated in tech and semiconductor giants. These firms have benefited from the global AI boom, but they are also extremely sensitive to rising yields. Higher rates compress valuations. Japan's tech sector has already shown signs of strain as bond yields spike. If these tech names correct sharply, the sell-off could spread across Asia. The sell-off could spread into U.S. markets, especially given Japan's role as a major external creditor and the highest debt-to-GDP ratio in the developed world. Analysts warn that if JGB yields stay elevated, Japan may be forced to unwind foreign holdings, including U.S. Treasuries, pushing U.S. yields to a breaking point. So, will Japan crash global markets? Absolutely, it's just a matter of when. The ingredients are all there: rising yields and a collapsing currency. A tech bubble sitting on top of the world's most indebted major economy. One misstep could turn Japan's domestic troubles into a worldwide shock.